Welcome to today's deep dive. We have a pretty massive mission ahead of us today.
We really do. It's a heavy stack of reading.
Yeah, we are unpacking a huge pile of recent earnings reports, analyst notes, and some fresh market data on one of the most dominant, unavoidable companies on Earth, Amazon.
Unavoidable is definitely the right word for it.
Totally. And our primary goal today, whether you are actively managing a portfolio, prepping for a finance meeting, or you just kind of love understanding how these mega corporations operate, our goal is to answer a multi-trillion-dollar question. Is Amazon stock a good investment today?
Right, right.
So to get there, we're going to break down their blockbuster Q4 2025 earnings. We'll explore how they finally dethroned a legacy retail king and analyze this AI spending scare that has Wall Street buzzing right now.
Yeah, that spending scare is a big one.
It is. Plus, we'll look at the final verdict from top analysts. And we promise to bypass the dense financial jargon to extract the exact moments you need. So, to set the stage for us, how should we be looking at this company right now?
Well, what's fascinating here is that you really have to drop the idea that you are looking at a retailer.
Okay.
Yeah, based on the market data and the analyst notes we have, Amazon is no longer just a store. It is fundamentally a geopolitical and technological infrastructure company.
That's a huge distinction.
It is. I mean, the retail side is what we all see. You see the cardboard boxes on your porch. But that invisible digital infrastructure running beneath that is what's reshaping the global economy.
Okay, let's unpack this. Because looking at the big picture data, there is a historic milestone that just happened. And it perfectly illustrates what you're saying.
The Walmart flip.
Exactly. For the first time ever, Amazon has officially dethroned Walmart as the world's biggest company by sales. For the year ending December 2025, Amazon hit $716.9 billion in revenue.
Unbelievable numbers.
Yeah, edging out Walmart's $713.2 billion.
And to understand why that flip finally happened, you have to look at the structural differences between them. Walmart reigned supreme for decades because of physical mass. They have 11,000 physical stores. They employ over 2 million people.
Which is a massive overhead.
Right. And Amazon historically struggled with physical retail, even after they bought Whole Foods. But their secret weapon, technology. Specifically, AWS Amazon Web Services and the sheer force of this AI boom, that's what pushed them over the edge.
So it's not the everything store anymore, it's the everything cloud.
Exactly.
Let's look at that cloud landscape for a second, just using the mid-2025 data from our stack. AWS completely dominates with a 30% market share.
A massive lead.
Yeah, followed by Microsoft Azure at 20% and Google Cloud at 13%.
And the global cloud infrastructure market is growing by 25% year over year. It's projected to cross $400 billion. So AWS isn't just winning a race, they're taking the lion's share of an exploding pie.
Which brings us directly to their financial health. Let's dive into that Q4 2025 earnings call.
Let's do it.
So Q4 net sales increased 14% to $213.4 billion. But the really crazy number, AWS growth accelerated to 24%.
Which is its fastest growth in 13 quarters, I should add.
Right, hitting a $142 billion annualized run rate. Just a total cash printing machine. But it wasn't a totally smooth ride, was it?
No, it definitely wasn't. There were some major bumps in the road when it comes to special charges and margins.
Yeah, I saw that in Q3 2025, they took a $2.5 billion hit for an FTC settlement, plus another $1.8 billion in severance.
And we should be super clear here for everyone listening. We're strictly reporting the financial realities from the filings. We aren't taking a stance on the politics or the policies of the FTC.
Absolutely not. We are just looking at the balance sheet. And in Q4, even though operating income was a massive $25 billion, it included another $2.4 billion in special charges.
Right, which included physical store impairments and a $1.1 billion Italy tax dispute.
Which makes me wonder, how much do global politics and macroeconomics actually impact a company at this scale?
Huge impact. Their immense international footprint exposes them to geopolitical realities every single day. The Q4 international sales grew 17%, which is great. But management noted that a significant portion of their forward guidance is completely tied to foreign exchange rates.
Meaning currency fluctuations.
Exactly. They expect a 180 basis point favorable impact just from currency in Q1 2026. Plus, they specifically flagged tariffs, trade policies, and global economic conditions as ongoing risks. That Italian tax settlement is a prime example of the regulatory hurdles they constantly face.
Just the cost of doing business globally. But while they're paying out those settlements, they're also cashing some massive checks. In Q3, Amazon reported a $9.5 billion pre-tax gain from a single investment.
The Anthropic windfall.
Yep, $9.5 billion just from their stake in that AI startup.
Which perfectly highlights their moat. They aren't just building the cloud, they are investing in the companies that will drive demand for the cloud. But we can't let the AI stuff overshadow their core retail innovations.
Oh, definitely not. Their logistical moat is terrifyingly efficient right now. In 2025, they delivered over 8 billion items same or next day to U.S. Prime members.
8 billion.
Yeah. And to do that, they have deployed over 1 million robots in their fulfillment centers.
And they're using that speed to push entirely new retail offerings. Everyday essentials. So, toothpaste, paper towels now represent a third of all U.S. store unit sales.
People are just buying their daily groceries on there now.
Right. And they launched Amazon Haul, which has over 1 million items under $10 to compete with those super cheap discount apps. That's expanding to over 25 countries. Plus, same-day perishables literally delivering fresh groceries is now in over 2,300 U.S. cities.
And it gets even more sci-fi when you add Rufus into the mix.
Oh, Rufus is a game changer.
Yeah, for you listening who haven't used it, Rufus is Amazon's new AI shopping assistant. In 2025, Rufus had over 300 million customer uses.
And it's not just a chatbot, it's driving real money.
Huge money. It drove a 60% lift in purchase likelihood, delivering nearly $12 billion in incremental annualized sales.
It's the beginning of what we call agentic commerce, AI doing the shopping with you.
But wait, if that's the digital moat, we have to talk about the space moat.
Yes. Project Kuiper.
Right. Amazon LEO, their low Earth orbit satellites, they have launched 180 satellites so far.
With the commercial rollout expected later in 2026.
Why do they invade satellites?
It's to provide global enterprise connectivity. If you want to offer cloud services anywhere on Earth, owning the satellite infrastructure means you don't have to rely on anyone else's telecom network. You own the entire pipeline.
Which takes an unbelievable amount of money to build. Which brings us to the elephant in the room, the $200 billion question.
The AI spending scare.
Yeah. Amazon announced they expect to spend a staggering $200 billion in capital expenditures CapEx in 2026, mostly on AWS and AI.
Right.
That is $52 billion higher than Wall Street expected. And it caused a total panic among some investors who think they're just burning cash.
Well, if you connect this to the bigger picture, top analysts, specifically the team at Bank of America, say the market is completely misreading this.
How so?
In the cloud economy, infrastructure capacity is directly monetizable. If you build it, the demand is already there waiting to rent it.
Okay, let's look at Bank of America's math on this because it's pretty wild.
Yeah.
Amazon added 3.9 gigawatts of power in 2025.
Just massive amounts of electricity.
Yeah. And BofA calculates that one single gigawatt generates about $5.4 billion in incremental sales.
Right, and Amazon plans to double its total capacity to 31.4 gigawatts by 2027.
So doing that math.
BofA says this power expansion will drive AWS revenues to $45 billion by 2027.
Wow. So they aren't just buying generic servers either. Amazon is building its own custom silicon.
The Trainium and Graviton chips.
Yep. They launched Project Rainier, which is this massive AI cluster with nearly 500,000 Trainium 2 chips built specifically for Anthropic's Claude models.
It's total vertical integration. They own the power, the chips, the data center, and they own a stake in the AI company renting the data center.
So with all that capital flowing out and all that revenue coming in, we have to ask the ultimate question on everyone's mind. What do the experts say? Is it a buy at the current price?
Based on the 44 top analysts in our data stack, the consensus is a resounding strong buy.
Literally 19 strong buy ratings and 23 buy ratings.
Exactly. The stock has been trading in the $214 to $252 range recently. The average 12-month price target from these analysts is $279.57.
Which implies roughly a 30% upside.
Yeah, Bank of America is targeting $275, and some analysts are going as high as $325 or even $360.
So how do they justify those targets on a company already worth trillions?
They use a sum of the parts valuation, meaning you value the different pieces of Amazon separately because they are basically different industries.
Okay, break that down, Sarah.
BofA values AWS at 10 times its projected 2027 sales. They value the third-party retail business at 2.5 times sales.
And we haven't even mentioned advertising.
Oh, right. Advertising is a monster.
In Q4 alone, ad revenue was $21.3 billion.
Just incredible. And BOFA values that advertising segment at 5 times sales. When you add all those parts together, you get that 30% upside target.
But we always have to look at the other side of the coin. What are the risks? What's the bear case here?
Analysts definitely warn about a few things. First, offline retail competition. Walmart is not going down without a fight.
Fair.
Second, AWS clients are actively optimizing their costs. Basically, enterprise clients are trying to figure out how to spend less money on cloud services.
Right, trying to become more efficient.
Exactly. And third, regulatory pressure on the third-party marketplace. The global scrutiny is not going away anytime soon.
So summarizing this entire deep dive for you listening today, Amazon has officially dethroned Walmart. AWS is essentially a cash printing machine fueled by the AI boom. And despite that terrifying $200 billion CapEx bill, Wall Street believes their aggressive investment in power and custom chips makes the stock a strong buy, with a nearly 30% upside.
That's the core of it.
The big takeaway here is that you really have to look past the scary headline numbers. A massive CapEx spending bill or an FTC fine might look bad in isolation, but understanding the underlying growth trajectory of the infrastructure is what actually matters.
Absolutely.
So before we sign off, we want to leave you with a final thought to mull over. Something that builds on everything we've talked about today.
Yeah, think about this. With AI shopping assistants like Rufus already driving billions of dollars in incremental sales and new tools being developed to actually execute those transactions for you, we are entering the true era of agentic commerce.
It's wild to think about.
It really is. What happens to the global economy when the primary consumers making purchasing decisions are no longer human beings, but algorithms buying from other algorithms?
An economy driven by bots, buying from bots. Definitely something to keep in mind as you look at your portfolio this year. Thank you so much for joining us on this deep dive into the numbers.
Thanks for listening.
We'll catch you next time.